Hallo mensen, mijn naam is Johnny Verkeuringen, CEO van de Europese Goudstandaard. Een Belgische dealer in fysiek goud en zilver, baren en munten. Vandaag hebben we een man met veel ervaring en kennis te gast, Andy Schectman. Meneer Schectman is de president van Miles Franklin Precious Metals Investments. Dat is een van de oudste edelmetaalbedrijven van de Verenigde Staten met een wereldwijde klantenkring. Met zijn inmiddels meer dan 30 jaar ervaring is Andy Schectman een van de weinigen met zo'n sterke reputatie in de edelmetaalsector. Over die tijd bouwde hij een indrukwekkend netwerk op met mijnbedrijven en smelterijen over de hele wereld. Schectman weet als geen ander hoe de markt ervoor staat en wat de verwachtingen zijn voor de edelmetalen. We zijn dan ook bijzonder verheugd om zijn inzichten en ervaring met jullie te delen. Het interview zal in het Engels doorgaan, maar wees gerust, het is volledig ondertiteld. Zo hoeft u geen interessante informatie te missen. Ik hoop dat u mijn Engels vergeeft en dan verwelkom ik bij deze onze gast. Welcome, Mr. Andy Schectman. First of all, thank you for taking the time for this interview.
Thanks for having me, Johnny. It's good to see you. Good to talk with you. I appreciate the opportunity.
Thank you. Andy, can you tell us first a little bit more about yourself and Miles Franklin?
Sure. Well, Miles Franklin started 31 years ago. We are one of only 27 authorized United States Mint representatives in the world. We've done $6 billion in sales, fortunately, without ever receiving a customer or regulatory complaint. In fact, we've never had a complaint. We have in the United States something called the Better Business Bureau, which is accreditation to our company. We've never had any complaints regarding our business acumen. We are very proud of our worldwide exclusive relationship with Brinks in terms of our safe deposit box program and our fixed rate structure, the only ones in really that I know of in their entire global services chain who have a fixed rate on storage and a safe deposit box program in Canada that we built and have an exclusive on. So I guess what I'm trying to get at is that Miles Franklin is not your ordinary precious metals company. We've been around for a long time, never having any complaints, and trying to find creative solutions, unique creative solutions to accumulating precious metals and storing it globally. We're very happy to be here discussing this with you. And we don't do a whole lot in Europe, but certainly we have the ability to send product into Europe, and glad to meet you and your listeners.
Okay, that's great. Okay, let us first begin with your general expectations for the precious metal market. Do you see an awareness change in the world of investment? And what are your expectations for the industry?
Yeah, I see a global awakening. I've been doing this for a very long time, and the difference now, Johnny, is that there is a global awakening. People are waking up to what is happening to fiat currency. Mm-hmm. I think we are seeing a shift towards hard assets, a shift away from fiat currency. And you can see that really in what's happening with cryptocurrencies. You can see that in what's happening in money creation. And so there's a reaction and an awakening to the massive amount of money creation that is being used to stimulate an economy that has been locked down due to COVID. So when we talk about what are my expectations, there are two things that have happened, Johnny. The biggest to me, first of all, was the reclassification through the Basel III agreement of gold as tier one, as a tier one reserve class asset, in that it has now been levied as high as gold. If you'll allow me, please, I'd like to go back to 2017 and show a narrative. I'd like to draw a line from 2017 to where we are today to answer your question.
Okay.
In 2017, the central banks were all net sellers of gold. And it never made sense to me. They were all selling their gold. Cryptocurrencies, Bitcoin in particular, was going straight to the moon. And, being in the gold industry was tough in 2017. Then all of a sudden, out of nowhere, the German Bundesbank said, we want all our gold back from the New York Fed. They said, send us our gold back, and we want it back by 2020. Okay. Within a few months of that happening, the Dutch National Bank, the Austrian National Bank, the Bank of Turkey, the Bank of Austria, the Bank of Poland, all of these European central banks said, send us our gold back, not just from the New York Fed, but also from the Bank of England. It became a common thread where everyone was saying, give us our gold back. And that was unusual. The next year in 2018, out of nowhere, all of these central banks that were net sellers of gold prior bought more gold as a group than they did in the 60 years previously combined, out of nowhere. In 2019, in April, the Basel III reclassification of gold happened. So let's stop right there and realize first they pull it back, then they accumulate the crap out of it, and then they reclassify it as good as cash, as a tier 1 reserve asset, right? So they front ran that decision, which I view as the biggest development of my career. To levy gold to a tier 1 status from a tier 3 status is enormous. A tier 3 status meant that only 50% of its value was calculated on the balance sheet. A tier 1 status meant it's as good as cash. And as far as central banks are concerned, that's a huge development. But to see them front run that decision by a year and a half was very illuminating. Well, in 2019, they bought 90% more gold than they did in 2018, which was more gold than they had bought in the 60 years previously combined. In 2020, we saw more of the same central bank acquisition, but we see the International Monetary Fund, which is a group of 190 countries from around the world, saying, we want a new Bretton Woods standard. Well, what was Bretton Woods? Bretton Woods was right after World War II, Bretton Woods, New Hampshire, where they had a meeting, the Allies had a meeting that anointed the dollar, the world reserve currency, taking over for the pound sterling. So since Bretton Woods in 1944, the dollar has been the world reserve currency. Now in 2019 or 2020, you have 195 countries from around the world saying, we want a new standard. So follow the progression. In 2020, some more very interesting things happened. And I think this kind of crystallizes my narrative. In 2020, we see on the COMEX market the rise of a third group of reportables. Now, the COMEX market is where the price is set globally. Typically, on the COMEX, on the Commitment of Traders report that's published every week, you see the commercial banks versus the speculators. Speculators are the hedge funds. If the commercials go long, the specs go short, vice versa. Out of nowhere in 2020, there's a third group right in the middle. They're called the others. Now, these others are believed to be sovereign wealth funds and family offices. A family office is a hedge fund that's just pared it down a little bit because they have less restrictions, but they're the wealthiest private investors in the world. These family offices and private investors, sovereign wealth funds, have been copiously pulling metal off of COMEX. Last year in silver alone, they took over 330 million ounces. They were taking in 2020 as much gold and silver as deliveries off of the exchange as we would typically in a month, as we would typically see in a year. Normally, my whole career, going back 30 years, no one ever took delivery of COMEX. Maybe 1% of the contract stood for delivery. Now, all of a sudden in 2020, huge deliveries coming off by these two groups of private investors, sovereign wealth funds and family offices, the most sophisticated, well-funded private traders on the globe. So let's stop here. First, you see the central banks bring back their gold. Then they reclassify it. Then they accumulate the crap out of it. Then reclassify it, continue to accumulate. And now, are they their friends? Are they the same people just wearing jeans instead of a suit? Are they the private investors who know the policymakers that are copiously taking gold and silver off the exchange? Well, I believe they know the people making the rules. Now we get to 2021. We see a continuance of massive deliveries coming off of COMEX. In fact, if we look at March, in March, we saw 55 million ounces delivered off of COMEX. We saw 90 million ounces backdoored out of SLV. We see tons of gold and silver being exchanged for physical on the London Metals Exchange. We're seeing tremendous amount of metal coming off of the Shanghai Gold Exchange. We're seeing it coming out of India. All of this metal is now being taken off the exchanges and accumulated by strong hands. And if we look at what happened with the April gold contract so far, just the first 2 days alone of the first 2 days of the April gold contract deliveries saw 2 million ounces of gold, 20,000 contracts delivered. This never happened. It was normally 1%. Now it's huge amounts. 2 million ounces delivered to sovereign wealth funds and family offices just in the first 2 days alone. So what we are seeing, Johnny, yes, what we are seeing is a shift, an awakening by the public. But before the public really is fully awake, we're seeing the wealthiest, most influential investors in the world do one thing: take gold and silver off the exchanges, removing counterparty risk, taking it in possession.
Yes.
Physical. That's never happened before. So follow the big money. The big money always is ahead of the little guy. The big money sets the trend, and the big money is exiting stage left with all of the physical metal. So what do I expect? I expect prices to go higher than anyone thinks possible. I think it will be part of a new system as all of the world is destroying fiat currency in a race to the bottom. First, they're taking and securing their insurance as they destroy the currency out from underneath it. So I think gold and silver will go higher than people think possible. Honestly, I really, truly do.
Yeah, that's unbelievable. Unbelievable. Thank you for that. There's also a lot going on about the shortages in physical silver market at this moment. Can you tell us more about the situation is evolving in America and what is going to be the effect in Europe?
Well, let's start globally. First of all, we have a ratio right now, gold to silver ratio of roughly 70-1. You take the price of gold, divide it by silver, it's roughly 70-1. If you go back 5,000 years and dug a big hole in the ground, you would find a 16-1 geologic ratio. In other words, silver is 15.5 times more abundant geologically than gold. And that trend, that number of 15 to 16-1 held true for thousands of years. A couple hundred years ago, when we hit the Industrial Revolution, that number went to roughly about 100 to somewhere in the neighborhood of 100 to 150-1, somewhere in that neighborhood. And so when we look at where we are right now, the ratio of 70-1 is really somewhat of an outlier. Throughout my entire career, the ratio of gold to silver has typically averaged about 42-1, right? So 42-1 has been actually the average for pretty close to 100 years. In that neighborhood, 42-1. In March of this year, we saw it as high as 125-1. And the interesting thing about it is that what's coming out of the ground globally right now, a friend of mine is Keith Neumeyer. I don't know if you know who he is, but he's the CEO of First Majestic.
First Majestic.
And and he has told me personally, and if you listen to his interviews publicly, that what is coming out of the ground right now is 8-1. So globally, all of the people pulling silver out of the ground, it's coming out at 8-1. Furthermore, there's only 30% of all the silver mined out there comes from dedicated silver mines. 70% of it comes from byproduct of mining other metal, right? So you have a situation where typically on average, the world mines about 800 million ounces of silver per year. Typically, it's fairly static between 800 and 850. Yet the industry, whether it be between industrials or investment, are demanding over 1 billion ounces. So for the past 2 years, we have been short between 250 and 300 million ounces of silver in a shortfall. So let's just stop for a minute and look at what we're saying here. First of all, we're saying that the ratio right now of 70-1 is way out of whack from the last 100 years where it's been about 42-1. Secondly, we are seeing an environment where 70-1 is disconnected from what's coming out of the ground geologically at 8-1. And so when we talk about silver, it is a depleted asset, and it might be the most undervalued asset on the planet. But here's what's so unique about silver. So first of all, let's look at the industrial side. You have President Biden talking about a new agenda, a green agenda, moving away from combustion engines into green, and moving away from fossil fuels into solar and wind and battery. So silver is indispensable in all of those things. It's right now, before all of this shift to green, solar panels account for 20% of all the silver mined on the planet. Now you're moving into a situation where there will be a greater proliferation of solar panels. Same thing with wind. Lots of silver used in wind turbines. How about batteries? Indispensable in connectivity. Talk about Tesla and all of these batteries out there that are needed to help grow this green agenda. The need for silver in industry is massively expanding. Let's talk about the Chinese Belt Road and Rail Initiative. It is the largest infrastructure project in human history that is now underway. It is connecting Asia and Africa. That is almost 70% of the world's population, nearly. That's 45% of global GDP. That is being connected in this ambitious infrastructure program that is not just being connected by rails and roads and bridges and maritime channels, but also digitally. So you have huge amount of silver that is needed to facilitate this massive infrastructure program. So you have the industrial side, which is growing in an environment where silver is becoming harder and harder and harder to find. Of the 800 million ounces each year, only 240 to 250 million ounces come from dedicated silver companies. The rest comes from byproduct. It's becoming harder to get while the uses keep going up. But what about the other side? You have the investment side. Now think about it. There are very few commodities on the planet that are bracketed by demand so voraciously by industrial and investment. If you look at, for example, like copper, it's all industrial. Yeah. If you look at gold, it's mostly investment. There's a little bit of industrial. The point of it is that silver might be the best, I would call it, maybe the opportunity of a generation where you have massive demand industrial that's growing, expanding exponentially like this. And now all of a sudden, because of the growing awakening to the destruction of fiat currency, the growing awakening of the silver Wall Street group, the growing awakening altogether on the investment side, you have massive demand bracketing an asset that is depleted in nature and becoming harder and harder and harder to find. If we go back to March of last year, that ratio was 125 to 1. Now it's 70 to 1. It's coming out of the ground at 8 to 1. If you can buy something at 70 to 1, but it's being produced at 8 to 1, what does that tell you for future price? When I asked Keith that, when I did an interview with him on my YouTube channel, on the Miles Franklin YouTube channel, it was a few months ago, the ratio was 80 to 1. And I said, Keith, do you think that the ratio will fall towards its natural ratio of what's coming out of the ground right now? He says, Andy, you tell me, how long can we continue to mine something at 8 to 1 and sell it at 80 to 1? So when I look at silver, I truly believe it is the investment opportunity of a generation. When we talk about gold, the central banks have reclassified it as good as cash. Prior to that reclassification, it was U.S. treasuries and cash. That was it as tier one. Now gold is right there with it. Treasuries, cash, gold, highest level, everything else below it. So you tell me, if the most well-funded, well-informed, sophisticated traders on the planet are massively accumulating gold, bringing it home, taking it off the exchanges, and then you look at silver, massively depleted and undervalued at last year on the COMEX, 300 plus million ounces delivered off the exchange. One of the things that I'd also like to talk about on that is that this year, so last year, all those deliveries were delivered to strong hands, but they stayed inside the COMEX vault. Never understood that. I would say, why are they not taking it out of there? Guess what? 35 million ounces were just delivered out of the building last month in March. Who was that? Was that Elon Musk? Was that Apple? Was that Tesla? Was that Panasonic? Who knows? But all of these industrials who know that silver is depleted, that it's becoming harder to get, that there's a way growing awareness on investment. They know that if they want this iPhone to work or this computer that I'm talking to you on to work, they need silver. So are they pulling it out now, getting it? So what happens when that starts to snowball? Tesla says, oh, geez, Apple just took 30 million ounces off. I better get, Panasonic says, well, we better get it. And then the hedge funds say, well, look what's happening to silver. It's disappearing. Let's get on. So you have all of this demand on both sides clawing at each other as it goes higher and higher. I look at silver as the investment opportunity of a generation, but I would not count out gold, because when you see the level of sophistication of the central banks bringing it home, accumulating it, and reclassifying it, you tell me, Johnny, what does that say for the future of gold and silver in the vein or in the light of destroying fiat currency? I look at gold and silver as really very important. And you can see the movements of these well-funded, sophisticated investors front running the rest of us and using the price and the narrative by the mainstream to misdirect everyone. It's the no-look pass in basketball, right? It's a fake out. In any game that you've ever played, whether it be chess or checkers or football or baseball or soccer, or it's football over here it's soccer. Whatever game you play, you use misdirection. You misdirect the opponent. That happens in finance too. Big money is using the misdirected levered price, futures price, to knock the price down, to misdirect the public away from all the massive accumulation that we are seeing. They are misdirecting with price and with narrative to accumulate the crap out of it so they don't get crowded out of their trade. This portrays for much, much higher prices. Price is the greatest tool of misdirection when futures markets control the prices. So I think it's going to go much higher.
That was my next question. We hear here there's actually a lot happening with the COMEX and other precious metal exchanges. I think you have much more info about this in America than we have in Europe. The European media don't speak about this manipulation at all. Do you think there is some kind of manipulation going on at this moment?
Well, the U.S. media doesn't speak about it at all.
No?
There is 100% manipulation. I mean, look at J.P. Morgan. J.P. Morgan just paid a $920 million fine to the United States Justice Department and admitted manipulating the metals market. Yeah. The metals prices are 100% manipulated. Let me give you an example of how I can show you that it's manipulated and why they're doing it. Okay, so let's go back to February 1st and 2nd. February 1st and 2nd, we had the Wall Street Reddit group come on the scene. Those 2 days, the demand for precious metals was unlike anything I'd ever seen in 31 years, ever. I've never seen anything like it. Our phones rang more on February 2nd than they have ever in 31 years. And that pushed the price of silver up. The demand physically in the United States was unlike anything I've ever seen. So I'm going to try to explain something here. Hopefully I don't lose you. The market trades around the globe 24 hours a day, 7 days a week, with the exception of close on Friday night at roughly 5 o'clock Eastern, 5:30 Eastern Standard Time, to Sunday evening at 6 p.m. Eastern, when it opens up in Asia. Those 2 days, those 48 hours, the market sleeps. Nothing goes on. So what we typically do on a Friday afternoon, right before the COMEX market closes, is that we will buy contracts into the COMEX market so that we are able to hedge our position over the weekend. So in other words, if the market is closed and we do lots of business and we don't have a long position into the market, we can't hedge it. And if the market opens up, we're in big trouble. That Friday night, as demand is going insane, my head trader called me and said, Andy, how about we buy 11 COMEX contracts in silver to protect ourselves over the weekend? Now, each contract is 5,000 ounces. 11 contracts means we bought 55,000 ounces on paper long. So now I can sell 55,000 ounces over the weekend hedged. I figure that's more than enough, right? By mid-evening Friday night, I start seeing all of the online companies in the United States closing down, shutting down their websites.
Yeah,
and looking at their websites, you would see out of stock, out of stock, out of stock, out of stock. It looked as though they were shutting down because they were all out of stock. Wasn't the case. They were shutting down for the same reason I shut down the next morning. By Saturday morning, my trader calls me in a panic, my head trader, and he says, Andy, do you realize that we sold 90,000 ounces since last night? We are now 35,000 ounces naked exposed into the open Sunday night. Yeah. Whoa, shut her down. For the first time in 31 years, Miles Franklin shut down operations over the weekend, Saturday morning, after the online companies did. So we don't do things online yet. We are transitioning there. We used to do online, but we don't. We do things by phone. We're old school. But the online companies shut down for the same reason, because they were afraid. The rumor was, with all of the Wall Street Reddit group pushing the price of silver up, that the market would gap higher on Sunday. It opened up $1 plus and then kept going, but we were able to hedge it immediately. It cost us $42,000. We lost $42,000 because we were 35,000 ounces exposed and the price opened up. So that's the reason the market closed. So let's just stop here for a moment. You got more demand than I've ever seen in 31 years. Phones ringing off the hook. I was on vacation in Florida for 10 days, never left the house that we rented, not once, because I'm working 24 hours a day. The phone's ringing nonstop, hundreds and hundreds and hundreds of emails and phone calls, and nonstop. The demand's pushing silver up. You got craziness everywhere. The online companies are shutting down. Price at $30. So here's where the manipulation comes in. Some idiot, some genius idiot, decides to sell as the market leaves London in the middle of the night and is heading towards the United States, or in the early morning, right before it hits New York. It's called the access market. So we're talking 6:30 in the morning in the United States before it opens up. Somebody dumps 1.5 billion ounces of silver in paper onto the market. That's 2 years worth of global mine supply. So who in their right mind would dump $45 billion worth of paper silver onto a market in the craziest of demand, which immediately drops the price by almost $4? Instead, the right way to do it would be to slowly bleed it out over days so that you get the maximum price. So the price doesn't crater. The reason that was done, it was a drive-by shooting. It was done for effect. It was done to scare all the new people, who have come on board. Drove the price down. This is how they manipulate the market, through price, through naked future selling. And that is how they've been able to do it and control the narrative for the past several years. Well, it's not working. The price is climbing back up. The demand is off the charts, and we're seeing it all around the world. People are running out of supply. So yes, the COMEX market is 100% manipulated and controlled. And you can see it by, sorry, a little bug in my throat. You can see it by how the price is declining when they drop the metal down in a way that any normal trader would be fired, maybe prosecuted. It shouldn't happen that way. They are desperate. They're firing more bullets at this market and getting less and less and less effect out of it, while the investment demand is off the chart. Now, since that happened, let's talk about what happened on the COMEX since that happened. So they drive the price down after they suck in all the demand, right? That month, 55 million ounces are delivered off of COMEX at subsidized prices. The same people that funded SLV, put all that gold, silver into SLV as it was running up. Over the biggest 2-day inflow into SLV in its history, those same people, after they drove the price down, they backdoored, they pulled 90 million ounces. And those are only the commercial banks that do it. They delivered 90 million ounces out of SLV after it drove up. They knocked the price down, and then they pulled the physical silver out. 35 million ounces were done in what's called exchange for physical. That means people who have contracts on COMEX can exchange it for physical delivery in London. It doesn't show up on COMEX. So just between those three avenues, you're talking 150 million ounces of silver plus 160 taken off of all of the exchanges. You can see tremendous gold and silver being pulled off of all of the exchanges as the prices come down by the sophisticated investor. So they are manipulating the price not for just for kicks. They're doing it, I believe, to corner the physical market and supply at subsidized prices while misdirecting the public away from metals by driving the price down and letting the cryptocurrencies and the equities go to the moon. They're not messing with those yet, so they can corner the physical market. In other words, yes, it's manipulated, but the question is, why is it manipulated? And it's being manipulated right now so they can accumulate it. It's been manipulated for years for one reason, and it's called Gibson's paradox. Gibson's paradox is an economic term that explains the inverse relationship between real interest rates and the price of gold. If you keep interest rates low, gold should be way up here. So you shoot the canary in the gold mine so that it can't tell you, oh, interest rates are so low, you should be buying gold, which doesn't pay a coupon. Instead, they kill it and let interest rates run low, which creates perception or an illusion of wealth in real estate and in equities. Because if interest rates are really low, no one's going to buy fixed income. They'll buy equities. If interest rates are really low, you can buy a house that you couldn't otherwise not afford. So it's a big narrative, a big story. But the bottom line is simply this. Unequivocally, the price of metals have been manipulated for years. The central banks and the commercial banks realize, I think, that the jig is almost up, and you can see it by how they're accumulating and pulling metal off the exchanges before it becomes obvious to the rest of us that currencies are being destroyed and you better own some gold and silver. So they're front running what's happening, and they're using the manipulated price and the cover by the governments who seem to allow this to happen. Maybe it's the governments that are doing it themselves and using these as a proxy to accumulate all of the metal. But all I can tell you is unequivocally, yes, they have been manipulated.
Thank you, Andy. The next question, I think that this one is very important for everyone in the world. Do you expect a hyperinflation? And what impact could this have on the people, and how do we protect ourselves from it?
Well, yeah, I do expect hyperinflation, especially if we see the cryptocurrencies or the currencies move like to Fed coin. If we see government digital currencies, so as an example, the Chinese digital yuan was just issued, and I think that's going to be a major factor against the value of the U.S. dollar, which we can talk about. But yes, I do. What we are seeing right now is a lack of velocity, which, you're seeing inflation pick up in many areas, in lumber and in meat and in energy and healthcare. Inflation is definitely rising, but the level of money creation, look, in the United States, it took 300 years to create 800 billion in wealth. This year alone, they've created $4 trillion out of thin air just in stimulus programs, and now they want another $2 trillion for infrastructure. If you go back to 2019, they've created somewhere between $7 and $9 trillion out of thin air. Johnny, a trillion seconds ago was 31,688 years ago. That's a trillion seconds. So, that you're talking Neanderthal stalking the plains of Europe 31,000 years ago. That's how long ago a trillion seconds was. And they created 4 trillion like that. The reason that you're not seeing hyperinflation just yet is because there is no velocity. The velocity isn't spinning. People have been locked down, number one. And number two, when we talk about the term quantitative easing, that should typically be hyperinflationary, but it's not. It's actually deflationary. And without getting too deep in the weeds, the only way it becomes hyperinflationary is if the commercial banks who sell the bonds to the central bank, which then lowers interest rates and levies the bond market, they have to then lend that money into existence in the United States for money creation. Instead, what they're doing is putting it into a reserve account at the Federal Reserve, where it doesn't create money. It just sits there enriching the commercial bankers. when they sell the bonds, so let me just explain it. So I'm probably being a little confusing here. The commercial banks buy the bonds from the U.S. Treasury, and they own them, the U.S. government bonds. The Federal Reserve, if they go to those commercial banks and say, we want your bonds, sell them to us, they are obliged to. They have to sell them to them. That's called quantitative easing. So the Federal Reserve creates money by a keystroke. There's money. Give me your bonds. That lowers interest rates in the secondary market, increases bond values. Now, the commercial banks have all this money. They have two options. They can lend it into the economy, or they give it back to the Federal Reserve, where it sits in a reserve account earning 150 basis points right now, something like that. Why would they not lend it into the economy? By lending it into the economy, number one, that creates money. That's how money is created in the United States. You lend it into existence, and in Europe too. If you're not lending it into existence because everyone's going bankrupt, companies are folding because of the COVID and the lockdowns, the balance sheets are being destroyed, right? Everyone's losing their job. Businesses are foreclosed. No one can pay their mortgage. So the banks say, screw it. I'm not going to lend to these people and risk it. I'll just give it to the Fed and earn 150 basis points with safety. So what you're seeing is our lower interest rates and higher bond prices, but no money creation, no velocity. In normal times, they would lend that money out. They're not doing it right now. But when that money finds its way out into the system, unequivocally, we're going to have massive inflation. Ultimately, this will lead to hyperinflation. We're just not there yet. But yes, I do believe it's coming. I really, truly do. If we get the Fed digital currency, now the Federal Reserve can just give everyone money on their iPhone, spend it into existence, instead of asking the commercial banks to lend it into existence. The Fed is unhappy with the commercial banks. So the Fed goes to Congress and asks for the Banking for All Act, which Congress is looking at, which would enable them to give money to everyone digitally right here on their phone, which then creates massive velocity, massive inflation, and it's going to happen.
Okay. Last question, Andy. I would like to know how you see the prices. Can you put a price on it for gold and silver developing over over this year and maybe the next years?
That's always a hard thing to do. I would simply say I believe it's going higher than people think possible. If I had
That's very high.
I mean, if I had to guess, I think $3,000 gold this year is very reasonable. Okay. If we look at the 150-year average of gold to silver, the ratio is roughly 42-1. So right now, if we took gold right now, if we look at gold today in US dollars is about $17.70, up $31. If I take $17.70 and I divide it by 42, silver right now should be $42 an ounce. That's what silver should be today.
Yeah.
If we look at gold at $3,000 and divide it by 42, silver should be at $71.
Okay.
Is that a reasonable price? Absolutely, it is. If you take manipulation out of the market, absolutely. Yes. And so I think it will go higher than people think possible. And why do I think that? Johnny, look at what the wealthiest, most influential, well-funded people in the world have been doing. They have been front-running, accumulating gold, and using the low prices to do so while everyone is over here looking at the equity and the cryptocurrencies. But over here, when no one's looking, doubling it up. And then once they got it all, then they'll let it go. Not there yet, but I think it goes higher than anyone thinks possible. The wealthy, influential people, the people that are in the know, they always are ahead of the crowd. They always position themselves. It's like they build their Noah's Ark before the flood, and everyone else is chasing the ark down the street as the water's rising. You have to be proactive, and that's what the influential, in the know, well-funded people are doing, while the rest of us are looking elsewhere. And so, I think it goes higher than people think possible. And I don't say that because I own a precious metals company, Johnny. I say that because the people, the big money, they've been repositioning since 2017. Why did the Bundesbank bring their gold back? Why did your Dutch National Bank bring the gold back? Why did Austria and Poland and why do all these banks do that?
All the countries.
Yes. Why did they reallocate gold to tier one?
Mhm.
Why is why are they calling for a new Bretton Woods from 190 countries? Why are all these things happening? I would like to raise one other point when we talk about how hyperinflation could happen in the US and in Europe. Not as much in Europe. I'm worried more about the United States right now. And that would spill over everywhere because it is the world reserve currency. But here's the deal. This infrastructure program in China, it's the largest infrastructure program in human history, right? Connecting 70% of the world's population. The US is not part of this. All of these contracts that are being settled in infrastructure, everything, it's being settled in Chinese digital yuan. That sidesteps the US dollar. What does that mean? To me, that means that the US dollar will be challenged for singular world reserve currency status. You have 70% of the world being indoctrinated into a new currency. Slowly. You know, the Chinese think in terms of years and decades. Here in the US, we think in terms of hours and days. We are short-sighted. They're playing the long game. They're showing 70% of the human population what a new digital currency is all about, and they're incentivizing these companies to settle in this new digital yuan instead of US dollars. So now you're going to get an infrastructure program that is void of US dollar participation. That's 70% of world population. What does that say for the future of the dollar? Not very much. And so all these people start selling dollars back to the US, hyperinflation, like that. And then
when the dollars come back. No.
So it's going to happen, but when? And that's why the big money has quietly been doing this for 4 years. Before everyone wakes up to, oh my God, what happened? You wake up on a Monday morning and you're going to be, oh my, what's going on? And you're not going to be able to find the metal. Why? Look at the Perth Mint. Can't find it. Look at the Royal Mint in UK. Problems. Look at all the unallocated programs around the globe. Problems. You're seeing
Libertad.
Yes, the Libertad not coming out of Mexico. Exactly. Problems. You're beginning to see it everywhere. Now there's talk of the Kitco pooled program. Problems. All of these synthetic, unallocated, derivative programs are BS. Get the real thing. If you own something that is unallocated or pooled, sell it. Buy the real thing right now. Convert it to physical and watch what happens to the price. It's these synthetic unallocated programs that allows big money to manipulate the price because it's a Ponzi scheme. It's not there. Why? The people who have unallocated programs are calling Perth and say, we want to convert to allocated. We have to first fabricate. Sorry, it'll be 9 months. What? 9 months? What are you talking about? It's right. So that's the problem. It's like, in a normal market, Johnny, when everything is great and you're not worried about the world, unallocated's fine. But when the you know what hits the fan, you want your metal. Oh, 9 months, is that okay? No, it's not okay. And that's how they've been able to goose the system. All of these synthetic programs, SLV, GLD, Perth Mint, Kitco pooled, all of these pooled programs are bad news. And they're going to blow up. That'll be the last piece of the puzzle. When you see everyone leaving these unallocated programs, switching to physical, that's when you're going to see some real fireworks. And you know what? Here's my one prediction, Johnny. My prediction is simply this. The precious metals market will define itself by the inability of everyone out there to find anything because they're going to wait till it's too late. They're going to wait till the price goes like this. No one ever wants to buy when things are cheap. No one ever wants to buy when you're supposed to. Buy low, sell high. Problem is human nature is buy when it's rising and everyone oh boy, got to buy it, validates it. No one was buying Bitcoin when it was $400 a coin. They're all buying it now when it's 40, 50, 60,000 a coin.
Today,
Buy low. And that's my take on it because you see the most, again, well-funded, well-informed, influential traders on the planet front-running and gobbling up when everyone is looking over there. That's why this is the buying opportunity of a generation. Get it while you can, because when things blow up, it's going to happen like that. And it's going to happen on a Sunday night. And we're going to wake up Monday morning to a new reality.
Okay, Andy, We thank you so much for coming in our show. We're very grateful for this valuable information that you're giving us, and I appreciate it very much.
I would love to do this again, Johnny. All the best to you over there. You stay well, and thanks for the opportunity, and hello to all my friends in Europe. You take care, Johnny. Hope to talk to you soon.
Volg ons YouTube-kanaal voor aankomende interviews met meer experten van over heel de wereld. Word ook lid van onze besloten Facebookgroep Silver Squeeze, goud en zilver, waarom, wanneer, hoe en waar. Zo blijft u op de hoogte van alle nieuwe updates over de markt. Wilt u meer info of advies over het aankopen van fysiek goud of zilver? Ga dan naar onze website www.europeesegoudstandaard.be. Bedankt voor het kijken en tot een volgende video.